You know what it is? We're back once again with them Hollywood trades. We are here on gold. Again, we are tracking gold. As you know, gold is one of our babies, if not our main baby. Gold is the original meme coin. We are coming into the year strong with some really easy movements right now. Everything is looking like it's doing what we expected it to do. I would like to say, as always, Happy New Year to everybody. But as always, would be crazy. But um, as you all know, these markups are sovereign. I should say, we are standing on business with these markups as always. We are also, a lot of people are wanting to know a little bit more about the volume profiling and how we have those set up as well. Let's just go ahead and get into the new movement for the week. We are back bullish coming off of our Reaper ish support zone. That support zone was derived from this big liquidity interaction here. We're going to take that as the first bearish imbalanced flow zone, right? Starting from here, it happened here, and then starting from here, it happened there. So there's a upward flow as well, obviously, but the bears really liked that zone previously. And so when we reverse those heavy flows, you want to mark those areas where you reverse that heavy flow and start using it as support, right? So we reversed that flow here, boom, and then we started using this as support. This whole range here became support. We did have a resistance range, obviously, here in this highest candle. So we do mark that highest candle as well, because that was a pretty good resistance or supply zone. So as we go and start changing these markups as they grow and as they turn into other type of arrays, like this support, this resistance here turned into, was reversed, and so it should act as support. We did see some supportive action between this consolidation range, and we are seeing what it's doing in these levels here that we have marked, right? And so we're using these very specific kind of zones, flip zones, right? Like in levels. So let's go ahead and continue to mark up. Sometimes I like to do this on camera, sometimes I like to do it off, but we are going into the new year. We are going to start doing some top down detail markup in the moment type of analysis going forward. We got my buddy, man, my best friend of over 30 years. He's gonna be in here. So all you guys, my boy Gavin, you're gonna be in here. Of course, all the OGs, Olamide. We got Gabby in here. Old man John. We should be able to do some really good work this year. So this is what we call a bearish displacement, right? And so bearish displacement means that it didn't test the level, it just displaced, right? It moved, displacement, movement. So it moved through that level. That's what we call displacement, right? So for anybody who's learning price action, if you do catch a level like this, right? Like this was a candle low, swing low. So a swing low is when there's multiple candles that form that low, and then you close back above that and continue to break highs. That's a swing low. So again, right here, multiple candles, swing low, boom. These are candle lows, right? Candle lows. This could potentially be considered a swing low. Usually when you trade below another candle and then back above, that's a swing low. Those are more probable places to trade from. A swing low is a more probable place to trade from when you want to go long. You want to catch those swing lows, and then you want to go long if you can identify that a swing low is being put in, right? And there are different ways to see that. Like this was a swing high, multiple candles up, and then start closing back below those highs. Boom, swing high. Again, even right here, this went above this candle, and then if you wanted to go short, you got to swing high to trade short from, right? And so that's pretty much just the simple ideas that we're going to be using going forward into this year. and using these particular levels to kind of forecast where we're going to see those swing highs and swing lows. Okay, so what are we? 5 minutes in, we have this imbalance, right? This whole candle range here. It created a candle low, and then it displaced through that candle low, and then the next candle created a high, and then kept going. This whole range here is what you call an imbalance. There's a lot of science to the order flow as to why this is an imbalance, but when you understand how timed price delivery works, they're waiting, the robots and people are waiting for these candles to close before they start activating orders at certain levels, right? At certain candle levels, previous candle levels, right? And that's pretty much how it works. Like when this one closed, when this one opened, they designated this candle's low and its close as a shorting level. So when it came to those levels just slightly, it was able to short from those levels. And then you use previous levels as well, right? So you use all of these candle levels as well too, to determine, right, like where your liquidity is going to be. But that's more advanced. When you start coming to the left, you get a little more advanced. But in your break and retest or resistance rejection, you're going to have each individual candle is going to you're going to use these levels to determine swing highs, swing lows. Is it breaking or is it rejecting, right? And so that's pretty much what we're going to be doing. That's the whole entirety of the program. But as you see price, you're using all these fundamentals, and as you're seeing price grow, right? As you're seeing price kind of move through the chart and start seeing all these different levels, is just by time. So once you just understand the basics of what you're looking at, what you're looking for is just over time, then you can start putting those observations together. It's like, oh, it does do that at this point. Like this is an imbalance, right? So this bearish imbalance here, right, where price is going. I'm using the bodies too. This is an advanced thing that I do. A lot of people would have just kept it here and then monitored it on the way up. But we have a lot of markups down here. We have a lot of stuff there. So I usually try to use these bodies, and you can also use the body because body purging is a thing. So when you put a body inside of a range, the body, because of this, a lot of people don't. A line graph is using bodies, right? So where did I put this purple? I put it up against the high of where this line graph would be. That's a whole, it's sciency, obviously, but the closes are more weighted inside of certain algorithms than the highs and lows, than the actual candle highs and lows. So they're still using timed delivery because it had to close inside of that candle for this pivot to happen. It had to create that candle close there, but and that's all science. You don't really need to know all of that. You see what I'm doing pretty much. You catch on over time if you haven't been here already. This red level is the ultimate level that I'm really thinking price should go up to before any major liquidity can be transacted, because this is the break point. There is some people could use this as well. This is why we kind of getting that pause, right? We're kind of getting that pause because of this would be a mitigation block. I wouldn't really call it a breaker block. Breaker blocks would be the ones that are in that first consolidation before the rally and the drop. So this is the first consolidation, rally, drop. That's the first consolidation or order blocks that it dropped through. So those would be more of the breakers. I would call this more of a mitigation block. I will mark it because it is showing, if you see, it's showing algorithmic strength inside of this block for whatever reason. So we will mark it. It's using the mid level, it's using the high, it's using the low. Well, this candle also kind of went up in there as well. So this is how we get really accurate levels. Like traders need levels, right? And so going into the year, I definitely want to expand upon some of these levels that I use, because these are like what you would call basic ICT or SMC levels. But I've really been able to kind of like dial in on certain little details that a lot of people, I mean, a lot of traders know about, but it's just choosing my pickiness on what to mark up has been really neat lately, I believe. And so, um, you see, I don't have too much on the chart. For me, this is already too much. This is a lot of stuff. I really wouldn't keep this on the chart visually. This is just for learning purposes. I'm actually going to take that off. It's too much for me. But pretty much when you see, right, there's a lot of orders here. So from this drop to here, there's a lot of orders here. So I would expect this level to be a major exchange level, this very level right here. And we see on the main overall volume profile over here, this volume profile is what we'll use for the expected entry level, right? And you can also use this, of course, but this is what usually you'll do when you get a drop, right? You'll measure the drop, and then as it grows, you'll keep the profile kind of growing with it, and then you'll catch. If you want to come up, back up this range into a continuation, you want to wait for it to develop a heavy bottom, right? So right here, it was kind of developing this heavy trading zone right here where price could make a lot of transactions. We did expect this rejection block to become support. Everything is already lining up that we're getting that. So I'm going to take this off. So this is what we're dealing with right now coming into the week. We're at 12 minutes. So right now coming into the week, this is what we're seeing. We're seeing a rejection off of this block right here. Why is that? Why is that like that? Okay, please, thank you. So right here, again, when you start seeing overlapping levels like that, like how you got that, and I could keep this coming over, but because the rejection block is the mid level is so algorithmic with this right here, I can use this rejection block. Usually I would keep my Reaper ranges going across, but now I'll use this rejection block and I'll just remember that it was of Reaper origin. So pretty much when we see that Reaper get that support zone, that's what I'll call it, Reaper support for my own mental purposes, turned into this rejection block, and it's really this whole block. So this whole candle should be a support zone, but more specifically, for whatever reason, we do notice that the wick itself does provide a premium and discount type of environment, and so we couldn't even trade into the discount of this wick because, right, we have multiple support levels supporting this range, like so. So pretty much we're just looking in between this range right now. This is noise. This right here is noise for me. So I'm actually just gonna pull that back just so I can remember that. But these are the main zones, and then there's even larger zones right here. There's a small imbalance here, but I do expect it to come back up this range for a bullish continuation in total. When you start looking at the new yearly candle, right? And if anybody has seen the way that the yearly goes, I put that in my last video. You guys can watch that. But this one is more about, coming into this week for me. And so I would mark this imbalance here. This is an imbalance, this zone. So I usually would mark that bearish sell side imbalance, buy side inefficiency. But we are not going to mark that because it doesn't look too bad. Like you could kind of say that it would go into that and correct it. We always expect imbalances to be corrected. We're bullish, and we always expect price to correct all of your bearish imbalance. This is a bearish candle, so that's a bearish imbalance candle. And when you're bullish, it's easy to really hard test the resistance, right, or the supply. So this is the supply range right here, and supply pretty much means that people who were in those buy orders or in those longs would be wanting to exit those longs, and so that it creates a supply, right? So right now, if we start buying, there's a lot of supply of orders, right? That the buyers, as the new buyers are buying, the old buyers are getting out. So it's a stalemate. So that's the type of situation that you'll get. And so that's the same thing that happened here, right? This was a place where it kind of is a seller's candle, and it got traded back above. A lot of sellers probably went in there thinking they were going to do some damage, and then they got traded back above. When it got traded back above, you've seen it started using that as a what? Demand. So as the sellers start selling into it, the demand of the buyers is higher than the sellers. So sorry about that. Um, 16 minutes in. This is pretty much the end of this video. We do expect it to just hard test that. That's pretty much that was the whole idea of the video. Like I got a message there. And that's pretty much what I have so far. We do expect a bullish continuation at some point. That was a little bit of explanation behind a lot of the markups I have. I hope that was educational for a few people. I'm actually gonna make this a break away range because it did not come back to test that imbalance like I thought it may have when we came down here. The support in this range was just too good. We did respect the mean threshold or the midline of that order block. We're going to go ahead and pull that back because it looks like we're going into test that hard test that support resistance range, supply range. So go ahead and share that with somebody or go back and study this video. These videos are very good for studying. If you just kind of like really listen to what I'm saying. It shouldn't be really difficult once you start really studying all the new people. Once you start really studying what I'm marking over time, you really understand it. Like it's pretty. I don't want to say it's simple, but over time, it does become easier to understand. Um, but yeah, that's it. And go ahead and subscribe. Share that with some folks who need to learn some real price action.